So welcome to McBoss Capital channel. Happy New Year 2024 to everybody who's listening to this channel. I'm gonna go through the notes this week. Not too much notes. We see lots of selling so far in techs and big techs in the new year, which is kind of something we talked about a week ago or 2 weeks ago that, that's something I want to see if it's happening in the new year as people, who's in the big techs have lots of gains, like Nvidia or Meta over 100% gains. So, it makes sense that some of them might want to sell in the new year for tax deferral purpose. And we are seeing some of that happening, definitely. And also like a lot of tech area also got hit hard, so that also not really bought well for the overall tech sector. Um, However, like Tom Lee did mention yesterday, he still feel the market like he obviously he thinks that January is usually a good month in the presidential election year. But so far it's very dismal like in terms of performance for sure. And so he's basically saying he's still bullish, but he's saying it's going to be a much tougher year in terms of how it moves. So we will see a lot of volatility and so forth. Um, and the reason he still thinks it's a good year is the PMI is falling, inflation is falling, and Fed has pivoted. Those are the three main things he talked about. Why he still remain his target. I can't remember his target. I think 5,400 or something for this year. So we start off the new year Tuesday, with a distribution day. Nasdaq slump 1.6%. It went to the 21-day moving average. And then what else here? Yeah, volume obviously rise, but we did see lots of buy in the biotech area, health area. So these are some of the stocks that was bought that day. Amgen, Merck, Johnson, and Regeneron, VRTX. So there's some of this, health sector doing well that day. There's Fifth Bancorp as well, that day. But a lot of tech stocks like ServiceNow, Shopify, Datadog all fell below the 21-day lines. Even the cruise line operators, Norwegian, Royal Caribbean, also fell sharply along with AMD and Intel. By Wednesday, we also suffered another distribution day. So that's two distribution days in a row. And this represents a four distribution days on S&P, which is, usually signify strong profit taking by fund managers. And this all happened within 9 trading sessions. So this is definitely worth paying attention to, because when this usually happens in a cluster in such a short time, is usually a big sign of more negative to come. So like really should pay attention to that. On Friday we have job reports. It kind of hit and miss. The non-farm payroll grown like quite a bit, 216,000 versus 164,000 expected. Unemployment rate held at 3.7%, rather than rising to 3.8%. So again, really strong. But the hourly earnings rose 4.1%, more than expectation. So I think the expectation was 4%. The Institute Supply Management Survey shows dropped by 15.6%, dropped to 50.6% from 52.7. So that also not doing so well, which is kind of expected. But so now it's at a 7-month low, right? So it's the ISM number. So yeah, okay, just continue with the notes here, and then we can look at charts. Stock market ends the week lower as Magnificent Seven slumps. We're gonna have inflation data coming out next week and bank earnings. So the major index saw a 9-week streak come to an end. So that's a long streak. The Nasdaq composite remain below the 21-day moving average. So this is probably a big to me, this is a big negative sign. Until it comes back, I think, it's very risky to buy new stocks at this moment. S&P also is at the 21-day line right now. Um, you know, the last winning streak was like of 9 weeks was back in 1963. So that's that just shows you how strong of a winning streak that was. Um, so so that's interesting. Yeah. Yeah, we're gonna look at some of this stuff, stochastic advanced decline line in a second here. Um, so yeah, again, I think this is continue to be the topic this week, and who knows what if it's gonna continue, right? Like, so 2023 we saw a huge gain from the Magnificent Seven, but they all ended the week lower. Apple struggled most with 5.9% drop, and Amazon and Tesla dropped around 4.4%. Next week, as mentioned, we have CPI data, which is going to be important for the market, coming out on Thursday. It's forecast to rise 0.2% after a 0.1% gain in November. So, if it stays on target, that'll be, or below it, that'll be really good. Core CPI is seen rising 0.3%. So that'll be the same as last month. So it's still, still a little bit high, but hey, as long as it can meet that target, I think market will be fine. Fed's, so one of the things that's been happening is the primary inflation rate, PCE price index, have diverged from the CPI lately. That's the true for core prices, because the core price rose, CPI rose 0.3% in November, but the core PCE price rose less than 0.1. So the producer price is basically much lower. There's no inflation there, but whereas the consumer price index is still going. So, you can take that with a grain of salt. Obviously, this is a good thing because the PPI is ultimately going to be factored into the consumer price. But right now, like, I don't know usually which one leads which one, but so that's interesting. So that's why Friday PPI will come out as well. So so that will also impact how the CPI number. I don't know which one is more important. Obviously, CPI is the most important because that affect consumers directly. But I think we also want to see PPI continue to stay in a downtrend, because if PPI start to shoot back up, then that's going to affect CPI down the road. And then we have lots of earnings coming out, right? Like from the banks. So so that will be important as well for most of the stocks like S&P. So that will determine whether the index can hold or at this current level, or whether they'll go down further. So right now I'm pushing on a lot of cash. So as earnings season come, I generally like to have some cash because, taking some profits in the winners is a great thing. But more importantly, if there's new good earnings report come out from certain companies, and they have good potential, good growth potential, I want to, either buy into those or add into those. So that's the reason why and during earnings season, usually there's some sort of sell off, because there's so much uncertainty. Most quarters, like I said, it's usually sell off for 1, 2, or even 3 weeks during that time, until the market is certain that the earnings are showing there's more growth than expected. Then the market will start buying back in, right? So last quarter we saw that. So last quarter earnings back in late October, the market was buying into the earnings, as there's some sell off 1 or 2 days, but it wasn't long. But there was mostly buying. So, and that's because a lot of the earnings and guidance were better than expected. So again, because it's the new year, there's going to be lots of revision in guidance, so that will impact a lot of stocks, probably more significantly than usual. So yeah. So yeah, and we'll talk about this couple stocks here. And, there's lots of stocks to still talk about despite the sell-off. I'm gonna look at the Nasdaq chart. And we'll look at it on the weekly for now, just because um, just want to see the big picture where we're at, right? We have this um, right here, this line right here, the previous high. It's not the all-time high, but the previous high, and we went above it. And 9 weeks straight up is pretty good, trend. Um, the last time I think we had a 19 weeks up, right? Um, so most of the time it run, when we have a rally, usually it runs more than 9 weeks, like right here back in 2020, 2021. So, and then this was last year. So, yeah, if we do stop here, it'll be a little bit surprising to me, because normally, like say, it runs longer than 9 weeks. So, but this sell-off is, I mean, it's 4 days of selling, but it's quite severe in my opinion. And then, like I say, if you have growth stocks, most likely they're getting hit harder. Because Nasdaq is down 3.25%, but most of the tech stocks or growth stocks they're down more than that. So yeah, so this again, this is quite disappointing that what I was trying to hope for was that the pullback is less severe than this. It's only 1 week, like I mean, but yeah, but it's not that far away from the 10-week moving average now. So the next support line is obviously the 10-week moving average. If we can't find support there, then yeah, we're definitely going down a lot further. Because then we have the 200-day here. The 200-day, obviously, you can see is rising, catching up to the price. So hopefully it doesn't come all the way back down. But 10-week is definitely looks like it wants to go there. So let's go to the daily chart. So you can see this downtrend right now. The 10-day slopes look like this, and here's the 10-day level, right? So it won't take much for it to come down here if it wants to. So, and that's the last support level. So that's where we would see some support as well at the 50-day along that line. Hopefully, yeah, like I say, hopefully that's where the last of the selling is, and then we can resume back on this rally. Yeah, so I feel optimistic around this level, and let's see if that will happen. But even coming down to that level, near 14,000 level, that's already quite a good pullback, right? From the top here. So I think that's around 8%, actually 7 to 8% probably. So that's a pretty significant pullback. When it's over 10%, then that's considered correction. But yeah, 7 to 8% is it's like I said, you see on the weekly chart, it's not that far away. So but on the 10-day, it still have a little bit more room here to get to that 7-8%. But yeah, so depending on the stock itself, some that are weaker, they will definitely drop more, like even 2 times that or 3 times that. So that could easily lose 10 to 20% there. So let's jump to S&P. We'll start with the weekly chart again. So this one looks a lot better than Nasdaq because it didn't fall back below this high. It's closer to this all-time high than to this high right here. But and also it's a little bit further away from the 10-week moving average, the red line. So that's also looks better. And the Nasdaq already dropped below the 21-day and it's heading towards 50-day. But right now you can see S&P is just holding on to the 21, the pink line. Hopefully it won't break that, because if it does break it, it will most likely, again, same thing, come down to the red line, which is the 50-day moving average here. Again, same idea. The 200-day line has been slowly catching up. You can see this is the widest gap here, and we also have quite a wide gap here. So now it's catching up again. And the last time it actually did this three wave back in July to October, sell off. Hopefully, but this time, it's not as far away. So hopefully it's not as bad this time. We'll see. Um, Going down to Dow. So Dow has been like, I don't know, super, super strong. Like you can see, not only did it pass the new high, look at how tight it's trading at the highs. That's unbelievable tightness in especially given what happened this week with other index. And look at how far, like it's the 50 days, like 10-week moving average is the same line. It's quite far away from it, which is not a good thing because it's kind of extended. But at the same time, the fact that it's trading so tight makes me think like no one wants to sell the Dow stocks. And this is holding at 10-day, right? So this is super strong. Like even on Friday, it came back up, turning green, and same thing as Thursday. It didn't turn red as well. So that's also so you can see the relative strength is going higher, right? Compared to S&P. So yeah, so Dow stocks, like what does that tell you, right? That tells you that global, because Dow comprised of global stocks, which means they're more influenced by non-US, right, currency. And so that also tells me the US dollar may not be as strong, even though there's a rebound this week, but it's definitely didn't act on the stock. So that also tells me no one's giving up on the fact that US dollar will remain strong. So that's why I mean I can jump to it right now, like UUP. This chart is a little bit screwed up because of this 1 day bug here that Marcus Smith has. But the trend, you see it's going up. Like Friday, I mean, it did start lower, but it came back up. So that is kind of, from a technical perspective, this is very strong. So, I don't know what's going to happen. Like I say, like, is there a delay action to this Dow sell off? Or, I think these two correlate really well at this moment. So we'll see. But right now, US dollar just doesn't want to go down. You can see how it rebounds. So that, if it passes the 10-day, then I'm gonna I'm gonna take my vote on the US dollar going stronger, and probably the Dow index will go down. But let's see, right? So I don't know. So I'm gonna go back to Dow now. Yeah. So but overall, like I say, I think the Dow are acting super strong. Is it possible that both of them will go sideways? And that's probably highly possible. So meaning like US dollar will go sideways for a week or two, and Dow will go sideways for a week or two, as this 50-day moving out or 10-week moving average catch up. That's possible, which is a good sign. If it can go sideways rather than selling off, that's a good sign. And then if the US dollar just kind of goes sideways as well, then then that's not good for US dollar, because eventually I think the strength will go away, and then it'll come back down. Like the downtrend is very severe right now on the 10-day slope. It broke that. Now we at the 21-day slope around like this. So can they break above it? It's possible. So I think it's hard to tell right now. Another week will probably give you the answer, which way it'll go. Also, the other thing is like this 50-day moving average has curved down pretty hard. Same thing with the 200-day is starting to curve down. When we see that, it's usually a bad sign, and the bounce is weak, like much weaker than I anticipated. So I was watching for that, and it just didn't bounce as strong as I wanted to this week. So to me, that's it's a not as strong as I thought it should be. Anyhow, so that's Dow and the US dollar. Going back to Russell. So, we came through this significant resistance level right here, but look at where we at now. We are like below it, and like I don't know. This doesn't look good, right? Because it could start another leg down. Um, and this part would have, fooled so many investors. And that could be really bad. So, but we had to kind of go back a little bit, right? Why is this Russell perform so badly, the small caps? And one of the reasons is because of the interest rate, right? And we have this big jump back here because everyone thinks, hey, Fed's gonna cut rates much faster now, right? So they're pricing in, and nothing has changed since last time we talked. Market's still expecting 6 rate cuts next year. Um, so that is still quite a big expectation. And so if they're not cutting as fast as the market has hoped, then yeah, then I wouldn't be surprised to come back down to this black line, which is the 200-day moving average. So maybe it won't go as far down this time, but it will, come back down to some middle level here, and then see how it goes. Whether, you know, by the time it comes to here, we'll be into February and earnings and stuff like that, and that will tell us, can the small caps continue to survive, or are they gonna run into more troubles, right? Because that it's been quite a while now, So I like, obviously, if you listen to Tom Lee, one of the most bullish analysts, he's is obviously more bullish in the sense that he doesn't think the small caps will have issue and stuff, but anyhow. So yeah, so that's the weekly chart on Russell. But on the daily chart, you can see the sell-off is very severe. The 10-day slope is pretty strong right now. The 50-day is starting to catch up, but it's still very far away. So that's the problem here. It was just too extended, right? And when it's too extended, look what happens. So that's one of the things that when stocks, or in this case index, but most stocks are very extended too. Um, it's always good idea to take some profit, and because your profit can disappear so fast, and this is what happened in the last 5-6 trading sessions. You give up, like if you look at this chart, you probably gave up. Most people will never get right at the bottom, so most likely your average cost is around here. So you already give up half your gains if you did hold on to what you have. So it's pretty drastic, right? So we have, like I said, lots of distribution days. But the other thing I wanted to show here is the stochastics. And so generally when you reach, like, below this 20% level, that's a good sign of a potential bottom coming up very soon. And you can see, you know, I can't remember the two lines. One is based on the shorter moving average, one's a longer moving average. I don't remember the numbers. So obviously the black line is probably the shorter moving average because it's coming down much faster. But you can see how fast it reached 20 already from the top, like above 80, right? Um, so that's a very fast move, and I'm actually surprised how fast it came down. Um, and then the slightly longer term moving average, is catching up, but generally it's when both of them cross it, that's when it's more reliable. And so far right now we only have this one, so this one might take maybe a few more days of sell off before it come down. So, but the reason why I think this is important is because, like I said, when it get below 20, that's when the sell off might be overdone. But we're not quite there yet. But I'm just surprised how fast this is coming down. Um, so so that's something to pay attention to, because I think once it hit below 20, then I have more confidence to put cash to work. That things will work out. Yeah, so S&P, as denoted by this red line here, 4 distribution days, meaning like selling on a down, like it's a down day, and it has higher volume than previous day. And this cluster of selling is quite scary because um, when it happened really close, that means that there's lots of action taken by institutions, especially because the volume, that much volume in such a short time, usually signify some sort of institution movement. And even though right now we're sitting near, still not that far from the top, this is we're reaching the a key, not that bad. Like I guess IBD hasn't switched their trend. Um, it's still, I mean, it is uptrend under pressure. So so yeah, let's jump to that right now just to show you what the trend looks like. So we are in a 2 months confirmed uptrend until recently. This week, Tuesday, after the second distribution day, right, in a row, that's when IBD switched to uptrend under pressure. Um, so that's when you really have to be careful now because um, when there's under pressure, not only can sell off, but it can accelerate and sell off because people start to panic, and that will force even more hands to give up on their holdings. So especially short-term traders, right? Obviously, so that's something to be worried, like definitely be cautious about. And that's why like I said, we talked about this last time. There's two ways to sell. You can sell into strength, but right now it's like definitely weakness now. So if you are selling into weakness, and this is why Mark Mooney will always say sell into strength rather than weakness, because that's when you will get the best price. Um, and and one of the things that IBD also point out is a lot of stocks in the last 2 months, November, December, hit 20% profit level, which is exactly the same level that they have always kind of used as one of the thumb of rule is to sell around 20-25% profit from your buy point, from the stock's breakout point. And so and that's like they say that it's such so many stocks that is unbelievable this time, that they top exactly around that level. So if you would have followed that rule, you would be in really good shape. But is it too late to sell into weakness? um, I don't know, because I feel like the market is still very weak right now. So I would say it's not too late, um, because like we just saw in the index, it's still not that close to the 50-day. And if it does go to the 50-day, then the stocks will still continue to sell off more, right? So that's a risk you will have to take. You know, yeah. So besides the stochastics, which we still want to see, it's definitely not at the bottom yet. But the other thing we want to look at is advanced decline line. You can see, for S&P down here, this advanced decline line has been really strong, but it kind of broke the trend, right? Because if you draw a line from the bottom, it broke that. But the other thing that I feel is more negative is that this last 2 days, you see how it kind of just lay flat. It didn't really move much. That is definitely not a good sign, you know, because you want to see a rebound, after such a strong down, like 3 days down or 4 days down. I don't know how many points down are, but yeah, after that many days down, you want to see some sort of rebound, like just like this, right? Like you see how it's very sharp, a rebound, right? And you just want to see that, but it's not doing that, and that worries me. um you know and this is S&P, but if you look at Nasdaq, it's even worse, right? It actually keep going down for like 6 days, 7 days now. So that started a new trend, like kind of like this, right? It just keep going down, 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 like down, down, down. Like you see how many days it goes down. Like this is lower, lower, low, lower, low, lower, high, lower. Like that's how you started a downtrend, and this is almost starting to look like that. So that's also not good. So yeah, so that's the two things. Like this two charts tells me a lot about the market conditions right now. So look at the Mag 7 right now, Magnificent 7, and Apple, look at how fast it came down to not only, once it broke the 21 day, it came down to 50 in one day. I think there was that news where there were antitrust lawsuit or something. Like, I think, can't remember. Yeah. Um, oh no, that was the day where I think the antitrust lawsuit came like probably yesterday, Thursday, I mean. And then the news before that was the fact that someone, I don't know, yeah, someone downgrade them or, oh yeah, they forecast one of the supplier, right? Or is it Apple? I can't remember who came out with the news. But anyhow, basically Apple is going to sell a like much lower, like weaker demand on their phones. So that was the big gap down that day. And then more bad news came out about antitrust lawsuit by the U.S. government. Um, yeah, because they have this yeah, lots of issues right now with Apple. But I'm just surprised how fast it came down. That is like insane. Like this is the slope right now. Right? That's the slope from the top. But if you look at the 10-day slope, it's even crazier. It's like this. So, um, is it ready for a bounce? That's what you would hope. You're at the 200-day. If you don't get a bounce here, I mean, if we cut through this, like last time it cut through this, it bounced back right away. So that's something you want to watch for. If it cut through this, it didn't bounce, you this is in big trouble. I mean, like I don't know how far this would go if it breaks. Like I don't know. Like I mean, there's some support level here as well. So you could probably find support there again. But yeah, so that's something to watch out for Apple. But like I say, I'm really surprised how fast the stock's coming down for large cap. So this is scary stuff. Tesla, we talk about this trend line many times now, and it broke through here, and I was saying, hey, when you break through this, you want it to move, and you know what? It just lingers here, linger and linger and linger, and all the people who think this, is safe now, they bought in, and guess what, right? You got full, and now it's on a pretty severe slope line as well. So, um, you know, so we'll see. Right now we're at 200 day, very similar to Apple. Same idea. If it cuts through this, I mean, last time, you saw a couple of days bounce, and then it fell below it, and then undercut it second time it found. So it did rebound. So that's good. So one time, two times. So you can look for that kind of pattern again. If it does undercut this two times and it doesn't bounce back, then you know something's wrong. So that's if you're a long-term holder, that's probably something to look out for. But yeah, nothing good ever happens under 200-day line. That's a famous saying. So especially if you're a long-term holder, so just beware of that. There's always other times to buy it back, right? Like this was a good moment to buy it back when it comes back above 200-day. Even if you did it here, it's okay. No big deal. But yeah, you know, Tesla, obviously has lots of investors in it. Probably want it's just like Apple. And on the weekly chart, you can see this pendant continues on this pattern. And that's why, the 200-day is almost the support line at the bottom. Last time it survived. But like I said, when it comes to technical pattern, it's never always like 100%, right? But it's about probability. And each time it break out of this pattern, if it comes down again, right? Like even not far, like it just comes out. Like each time it comes out, there's more risk of it not working, right? Especially when it's down on the bottom side of the pendant. It's no different than the breakout. When it's breaking out, if it goes up here and then it will come through, or it fell back, that's one time, and then it goes here, and if it and then it falls back, that's the two times. Same idea. If it always tries to, in this case, it never, right? It never came back. Um, so yeah, that's even worse. Okay. So that's Tesla. Let's go look at Amazon. Amazon, like I said, I tried this stock many times. You can see a lot of markers on here. And every time like it just doesn't move. And I talked about this last time. Anytime it breaks out, it just doesn't move like at the speed I want. And you can see the RS rating, right? This line right here. It just every time it breaks out, it comes back so fast. That's exactly the opposite what you want to see. When the stock move, you want to see the relative strength line like follows the price move, right? Because it's comparing that to the rest of S&P. So if the stock move, but then it's underperforming the S&P, then that's why the RS line is going the opposite way. So then that's what's happening to this, like so many times. Um, like I love their fundamental story, but anyhow, it just broke apart. Right now it's at 50-day. So look, another stock at 50-day, right? Like Apple is at 50-day, Tesla is at 50-day, Amazon's at 50-day. These are the three stocks at 50-day right now. Okay, let's continue. Google. Okay, so Google is slightly above 50-day. Again, it broke out here. I'm still holding this stock. Um, it's getting close to the 50-day, right? So again, this overall pattern is still look pretty good. So let me just refresh the screen. Basically, we have this, base right here, cuts in, and then you see a higher low right here. So hopefully, what I want to see is this is a higher high. So hopefully, this is going to be a higher low here, and then it can bounce off and continues, right? So that is, right now the market is under selling pressure for like Nasdaq. Then all the tech stocks are going to follow that trend. So right now the key is to find the tech stocks. I'm not saying buying it. I'm just saying watch it list, right? Watching the ones that are holding the best. And right now Google is doing not bad, right? It's still slightly above 50-day. So that's one, but overall it's still weak, right? It's just better than the previous three. So let's turn around and look at Microsoft, because I think this one, at least IB said this one has the best looking chart right now. It's a flat base. You see, all the lows here, and it hasn't come to that low yet, and it's just holding so tight. Like this 4 days of sell off is really, really tight. I mean, when we have so much selling pressure and it's trading tight. And again, it is at the 50-day line. So again, another stock at the 50-day. The only difference in this chart is that it's just trading really, really tight right now, which is a good sign. But like I say, even when it trade tight, it doesn't matter, because at the end of the day, if it can't find support at this level, once it breaks through this level, it's going to be severe. And this is the thing that I'm worried about that will happen, right? Once it breaks through this line, like there's no more support level, right? All the technical traders, all the algorithms are gonna fire, and that will create more panic sell-off. And that's why usually when they break through major resistance, in this case, you have two lows here, and you have the 50-day moving average. If it breaks through here, it's gonna be severe. So, and this is the best looking chart. So that tells you how good the Max 7 is doing. Nvidia. I mean, Nvidia is actually, you could argue is also probably the best stock as well, because it's trading really tight. Not only that, the last 2 days it rebound, rather than sell off. So I think, yeah, it's definitely forming a pendant pattern right now. So I mean, this stock's already have a lot of selling in the last how long, right? So it's been basically going sideways for a long time now. So that's probably a good thing, because time is on its side, because it has undergone so much digestion. And same thing, right? Like, I've tried this stock many times, it's just not going anywhere. We're waiting for this move like last time. And we need to, probably the safer thing to do is wait for this real breakout. Once we get through that highs here, then the sky is clear. That's when we know this digestion is over. So right now, it is quite impressive considering like I said, this week it didn't even close that much low. So we come back to weekly, yeah, it's only down 0.8%. Okay, so yeah, so Nvidia, Microsoft, they both look pretty good. Again, where's the support line? 50-day, right? So 50-day or 10-week moving average, they call it. IBD did a lot of study. This is where the institutions support the best stocks. If they fall apart, that means institution gave up on those stocks, at least near term. Whether they will continue to sell further down the line, no one knows. But at least near term, this is a very important line, because once it breaks that, you have no idea how far it will go. Like this is what happened last time, right? Back in 2021, late 2021. See, once it breaks that line, like you have no idea how far it will go. So that's the scary part. There's one more stock, Meta, right? Okay. Did we look at Meta already? I can't remember. So yeah, Meta stock, I mean, similar to Nvidia. So those three, Microsoft, Nvidia, Meta, surprisingly are doing pretty good. So like when you look at the RS line, I mean, it's not like strong or anything, but it's not weak, right? So it's almost at the new high actually. So that's pretty good, considering, and this has make higher highs. This is, to me, this is actually the better chart. I think this is the best chart actually, because you keep making higher highs and higher lows. To me, that's and you have to understand, right? Like I mean, again, overall, I think the Max 7, has been underperforming. Probably this is the only one that has been at least matching the S&P. Like that's why it's flat line. But most of them has just been underperforming them recently. So, but yeah, I do like Meta, because it was able to look at where it closed this week. It closed at the top, right? So this is where the IBD has identified now this Market Smith as a tight 3-week area, which allows you to add more positions when there's 3 weeks tight. But that's up to you. So we just finished with the index, major index chart, like looking at them, and then we talk about the Max 7. There's a scene of accumulation on the general market in terms of stocks and sectors. So when we look at the industry group, you can see we were pretty strong going into New Year. Even on Monday, actually this should be negative. So it's starting to go down, and now you can see it has accelerated. So the number of industry groups that being sold, so there's way more distribution than accumulation. And then you look at on the stock side, it was even on Monday, but then it kind of gave up. So but you can see there's still some accumulation. So that's interesting, right? So then we go to the sectors here: technology, retail, industry, industrial, health, commodities, and financial. And where's some of the accumulation happening? And right now, most of them is happening on the health. And on Friday, I was actually surprised how financial actually came back up green. So that's where there's some, and this is a net number. So this is not the total number. This is a net number. So meaning like accumulation minus distribution. But just to show you whether there's more accumulation or distribution. And right now there's a little bit more accumulation on the financial, a lot more on the health. And we saw selling technology, even retail and industrials even. And commodities are kind of even. So that's what's happening on the sector side. Yeah, so as we're gonna start looking at some health stocks first, because that is where we saw the most strength this week. So here we have Lilly with a new high on relative strength. So let's look at it. You can see on the weekly chart what it did this week is quite a big move actually. And there was some news about they're doing some telehealth stuff with their, I think, for whatever that weight loss drug is called. I can't remember. But anyhow, so and and this is a nice flat base of 13%, 11 weeks flat base. So that's quite, long enough. The last time it has a base was right here. So, and then there's a little one here. This one was even smaller, 8%. So now we're at 13% base, 11 weeks long. So looks pretty good. And, if it breaks out, it could make a move. And, again, this is, you know, very similar to Novartis. Both of them have the weight loss drug, and that's a big market share that can slowly accumulate over time, as is a new drug. So for the weight loss area, so yeah, so we go into another base. If it breaks out, I wouldn't be surprised it will make a big move, because it's just you know I think it's very bullish, right? What they're doing right now. Um, Especially with the potential to sell more with the telehealth. So yeah, like it's already if you draw the downtrend line here from the two peaks, it's already kind of broken out from that trend line. So you know, but on Thursday you can see it kind of peak out and came back in, which is normal. It happens. But overall, look at Friday, right? It wants to go back up again. So that's a good sign. Um, yeah, let's see if we can break out, like clean breakout. That'll be the best. And then let's see what happens. Like this breakout right here is a gap up from earnings. So that's when it broke out. When's this reporting? Like, okay, so that's another thing I want to talk about. February 6th. So I'm starting to put down all the earnings date here, right? So I generally, my rule of thumb is I don't usually buy near the earnings date because it's just too much risk. So with the further away it is, there's more time before that date. Hopefully, I'll have a cushion by then, gain some percentage, like 10 or more percent. Then that way I have more cushion to go into earnings, and I'm even if it drop 10% that day, at least I'm not gonna be down that much. Versus you going in directly and you just taking a gamble on the, unless you really believe in the stock, then you're probably going to be holding longer term. But for short term trading, I don't usually do that. I just wait. So that's why I'm tracking the earnings report now when they'll come out. Like this is a month away, so that's a lot of time for it. Once it breaks out, you have a lot of time to run to then. So that's something that to pay attention to. Next one, ENSG. Actually, we're going to jump to Novartis right now because that is related. So let's just try that one. Okay, so Novartis also broke out. You can see this is a double base on base pattern, very bullish. Actually, there's another base here, but it didn't draw that. I don't know why. It's probably too short. But there's a 3-week tights here. So this stock is probably stronger than Lilly. You can see, I mean, they're very similar. They're both on a really long-term uptrend based on those. Here it kind of broke out above the upper channel line, and but yeah, overall they're both very similar. So this stock also broke out this week, but this one looks better just because it's above the highs, right? Well, slightly. So yeah, but they're very similar. So go back to Lilly for a second. Yeah, the trend line is very similar. This one started a little bit later, but yeah, but very similar. So they're both really strong. Yeah, if the weight, like everyone say, if they're only 2% market share right now, but like on the obesity market, I mean, there's a 30% or 30 to 40% market share that they can get. So that's huge. Like that's far away. So this might be, a good long-term holding if you believe in that story and that no one else is gonna come in and take their share. These two stocks will probably be the titan for that. So most of these stocks, I don't even know what they do. So yeah, do your own, research and stuff. But this is Enzyme Group. They deal with medical long-term care. This is, not a high flyer, but it is like moving into new high grounds, and that's why it's on my list. Um, and the relative strength looked pretty healthy. So it's just one of those more. Uh, Hopefully it'll break out, and there was a previous run right here a long time ago, but who knows? Um, this one, 50-day slope is like this, so 45-degree angle almost. So that's a pretty good slope. So if it can keep going, and here's the 25% profit level, that'll be good too if it gets there. Next one is EVA. Davida met also on the home care side. So there's something going on with the home care, obviously, because two stocks from that area. So this one trading really tight on this handle, which is quite interesting. Like on the weekly chart, look at this run, and then it's trading so tight, right? 3 weeks area tight. Um, so yeah, relative strength is starting to come back up. Yeah, it's definitely a very volatile stock. But I'm surprised it's trading this tight right now. There's some selling here, and then now it's trading tight. It's riding the 10-day again. So this stock does ride the 10-day pretty good. So let's see if it, again, um, if you draw that upper trend line, um, pretty close to this buy point anyway. So I don't think it'll make much of a difference. So anyhow, yeah, that's the potential breakout point right there for that stock. Exact Science Molecular Diagnostics of Precancer. Yeah, okay. So yeah, so 50-day is starting to curve up. Also a 3-week tight here. Bounce back from the low this week. Um, oh, sorry, let me come back one second. Here, look at this volume here. So that's something happening here. Definitely some accumulation happening right now. And look at all the selling days, right? Except this couple here. It's happened around here, I think. But other than that, the selling has been very minor. So that's good. We're coming to this 200-day. So probably, if it breaks out of here, like it didn't last time. So, but if it does, then this might move. So, yeah. So that's Exact Science. PH. So this name is always on my list. So I think this probably end up on my list so many times when it comes to screening for stocks. So Amphastar, yeah, strong relative strength. Like it's definitely doing really well. Like earnings are really really strong. This is generic injectable inhalation. Yeah, yeah. I mean, there's no shortage of biotech stocks right now. A lot of them are moving. So there's just so many biotech stocks. So yeah, do your own research. I think IBD has a report this week, like on biotech stocks, because this is the headline: a new world for biopharma. After 2 dismal years for the stocks, 2024 is opening on exciting note, right? So this is a report that came out from IBD about biotech stocks. So definitely, do your own research and see, if the biotech's going to run. Oh yeah, so yeah, so we're looking at stocks right now. But let me jump back to the index for a second, because I'm surprised. Like, look at this index here, right? Like it's on the brink of like really taking off. So if you don't know what health stock to buy, this would be a good index to buy, a ETF, XBI. And look at all this accumulation volume; it's just huge. Yeah. So if this breaks out, like from this is like a double bottom base, and then here's another base. Like this is a long base. So, like yeah. Anyhow, very bullish sign. I like this chart. I was surprised. Like this is about, they say, close to. I didn't even notice this until an analyst mentioned this. 30% from the bottom, and who knows? It could continue to go, right. So it's just so strong, and yeah. Look at the daily chart for a second. So it pulled back slightly, but look at where it closed on Friday. Like it just doesn't want to go below 10-day, right? So this is a very good sign. When stocks just doesn't want to go below 10-day, those are the ones that are like this is an index obviously, but like those are the ones you want to pay attention to. Um, it just show how much strength this thing has been obeying the 10-day almost to the T. So finding support anyway. So yeah, really good. Relative strength is like I said, despite it pulling back, where's the relative strength? Near the highs, right? So very strong. Biotech right now is super strong. There's so many. Like I don't even know where to start with biotech stock. Like yesterday, there was an analyst throw out three names, and I never even heard of them. But yeah, if I remember them, I'll show. Let me like three of them. I don't again. I don't even know what they do. So do your own research. K Ross, here's one. Look at the RS rating. Um, just going nuts right now. Okay, another one. Okay, but it was so this one analyst. I don't even remember her name. So look at this RS rating 98. Like all these are smaller caps, right? So all these biotech stocks, obviously very risky stuff. Again, do your own research, but biotechs are moving. Like she threw out three names, and all three of them have strong RS rating. Like they're all moving, right? Like super fast. Um, so so if we have a good quarter this quarter on health stocks, like biotech will do really well. They're pretty much like the super growth stocks of tech for health, right? So yeah, Collegium. This one also show up on my list screening quite a bit. Look at how strong it is right now. Um, it's a small cap. The numbers look at least these are positive, right? A lot of biotech is negative, so at least these are positive numbers. And yeah, really strong fundamentals. It broke out already. Um, Look at the daily chart for a second. It pulls back after this 1 day run here. Um, but it looks okay, right? Like I mean, none of the days on the down Thursday, Friday, it closed at the bottom. It just show that that's a good sign. It means there's lots of buying still, even though when it coming down. So actually, I like this a lot. And the 10-day slope is 45-degree angle. Um, let's go to Vortex. Vortex, very sloppy chart, but right now it's looking very good. The slope is 45-degree angle. It found support. You see at the 10-day, it bounced off the 10-day, like right here. Super clean bounce. Shows there are lots of support probably by institutions. And Vortex is, it's been around forever. Uh, Jim Ropel always talk about this stock because it's in his family portfolio for like I don't know many many years. Like it's not for trading. Like they don't trade this one, but it's like holding it for long term. But yeah, it's very volatile recently. But that again, that could be a good thing because it shake out a lot of weaker weight investors, and now it's just trading so tight, breaking to new high this week. These are all positive sign. So this bounce is probably yeah, I think there was some news, right? I can't remember. It was some news with yeah. Was it with CRISPR? Yeah, I think it was with CRISPR. Let's look at CRISPR. I haven't seen look at CRISPR since that time. Um yeah, this one is definitely more choppier. Like it went up but then it came back down. So there's some digestion still going. Uh yeah, this was a bad break. And it's gonna take time to repair this because people have lost their confidence. So right now you can see you can't even stay above the 10-day very well. So yeah, very volatile. Um, yeah, okay. So Cardinal Health wholesale, it bounced this week, looks pretty good. Um, Regeneron, this one making new highs this week, starting to make that move. 50 days turning, looks pretty good. Yeah, volume and breakout is pretty good too. So yeah, Amgen also broke to new high, so that's really good. Look, this is a very clean breakout. So Amgen, I always hear Amgen, right? Everyone always talk about Amgen because it was like in the history, it's like one of the best stock or whatever, right? I can't remember, like if you go back many years or something, even in the 90s, I think it was like super humongous stock. Like it makes lots of money. Yeah, this was like what happened in so the 80s was going, the 90s was going. Look at this. Look at this run. Crazy run. Anyhow, so everyone always talk about this one being uh a historical, one of those historical stock that ran the most. And today it's still running. It's crazy. Look at it, it's still running. So it's not as fast as it used to because it's such a big company now, right? But still running, like But yeah, I don't know. This thing last time it didn't work well. Here is very choppy. Like who knows? But right now the health sector overall has a wind behind them, right? So maybe this time it will finally do something. We'll see. So right now I would follow this trend because there's nothing else good to buy anyway. Um, so that's the health sector. Um, we'll look at other sectors as an overall because most of the most of the other areas are uh, not as strong for sure. Like I mean, financials, yeah, there's some PLX. These two names kind of came out on Friday. So BLX, you can look at it. Banks, foreign banks. This is basically in the South America.
Yeah, I like
Yeah, this is a nice move right here. Like I mean, you know, I always talk about this right from a technical perspective. Is when you look at chart, you see how it like built a very tight trading range here, and it took like how many 6 weeks, right? And then when it only took 1 week to break out, and not only break out, like it break out strong from that trading range, right? That's what you like to see is when it can just come out so fast. I don't know if there's any news, but yeah, this is really really powerful move. Like when they break out, that means that institutions are into this, right? Like that means a lot of eyes are on this. This is why it's happening. So yeah, once it breaks out, hopefully it'll clear the path for it to move. So that's that one. What was the next one? CRBG. So this one is probably smaller. Oh, I guess BLS is small too. Oh, actually this one is bigger. 14. This is in the insurance life. Oh, this is an IPO. So it has turned positive. Growth again, and yeah, I mean the trend line has been broken from the upper trend line. This is like this trading range also breakout, so looks good. High volume on the breakout, that's also good. And so from this shorter consolidation, it broke out. So yeah, so you see, this is what happens once you have a clean breakout. Everyone trusts that breakout usually. Volume is slightly lower than I would like, but anyhow, and then it falls through on Friday. So this is a $20 stock. Whenever you're dealing with $20 stock, there's always high volatility. So it can get choppy. So, but yeah, this name came out on Friday. We'll just look at all the financial ones, just because it seems to be also catching on some strength. AGO, insurance, and other insurance. This one a little bit extended. It's already getting closer to the 20% profit zone, but it trades really tight. It's a nice, easy to hold type of stock. Mid cap, $75. Yeah, and again, numbers are very strong. So what's the next one? Oh, okay, so this is the big guy. Oh, I think they're reporting this week. WSC, right? Wells Fargo. Yeah. So I mean, a lot of the big banks yeah, we didn't really talk about that. So yeah, a lot of the big banks are gonna be reporting Friday. So this will, so like I look back the last few quarters, the market didn't react too much to bank earnings, which is a good thing because considering that interest rate was still high. But now the earnings interest rate are expected to come down this year. Are the banks finally gonna run? And a lot of them has, right? Like you can see the uptrend is pretty strong. Like even on this guy, 45-degree angle, probably even higher. I mean, you can look at lots of bank charts. They all look pretty good. They all look like this. And this week is a down week for the market, but yet, what did this stock do? It moves up, right? So yeah, this looks pretty good. Like I said, it is coming. The problem with Wells Fargo is they always have like not good reaction after earnings. Look at this. Look at this. So I remember this stock very well.
Yeah.
Look at this. Every single time it have earnings, it does not do well for Wells Fargo. But for other ones, they seem to do better. But anyhow, this one is moving before the earnings, so I don't know. But like, I mean, you can pick any of this, like JP Morgan, let's say. Okay, JP Morgan. Yeah, look at this. This is on many weeks run now. It's not on my list because I don't know why they have a negative guidance. So, but let's see. Maybe they will turn that around this time. This is good earnings right now, but the guidance for this last quarter is negative. I don't know why. But they might beat it. Most likely they'll beat it based on this action. The market trusts that they'll beat it. So yeah. So if it does beat it, I'll probably get into it. It's a little bit extended now. Probably if they do beat it, depending how much they beat the guidance, we'll see. It might be too far extended, or it might miss it and come back down, and then give me a chance to get in. But let's see how that goes. Okay, UBS. This one also came on the screen many times. Again, not on my radar because of some negative guidance, and last quarter also negative. So let's see. Right now they have their wind behind their back as well. So I think it's similar to health, right? Like you can see, well, this one kind of fall back this week, but yeah, but some of them have a good wind behind them. So BAC also reporting this week. Yeah, look at this one. This one is like breaking to new highs, right? So again, very low earnings numbers, but yeah, but they have a whole sector strength right now. So they're doing good right now. So and the 50-day lines are a very strong slope. So all these stocks reminds me of like the home builders, right? I haven't looked at home builders, but yeah, let's go to it. Let's look at the because I don't have any stock on my list, but I just want to look at the index. So it did come down this week. Again, because the yield's been rising. That's something we didn't talk about. But it's holding pretty tight, like for not that bad actually. Like so, this might just be a normal pullback before it takes off again. So if you look at the yield, it has come up quite a bit, right? So it broke through, you see, 10-day, and then now it broke through 21, and now it's at the 200-day. It found resistance there, but it's still a positive day overall on Friday. So if this continues to go up, it's probably not a good sign for the market, okay? Because the market don't want to see this happening. Yeah, so this is also another thing to watch, because I think the market won't go anywhere when this thing is going up, right? But the 50-day is coming down very fast. So hopefully the worst case scenario, is it come to the 50-day line and then come back down. That happens a lot on the downtrend. So it's no different than when it's on uptrend, right? It goes down to 50-day, bounce support, bounce back. Goes down to 50-day, found support, bounce back. Go to 50-day, found, it's no different, right? But this is on the other way. So it's possible that it will come back to 50-day and then go back down. So that's most likely what will happen. But yeah, so that means, based on this chart, you probably have another week or so of digestion from the marketplace, meaning the market probably not going to be bullish for another week or two. So yeah, we didn't look at that. Probably we want to look at oil too, because oil didn't do much this week, I think. Yeah, it did rebound a little bit. So it's kind of in the middle range right now. So yeah, anyhow. All right, coming back. Sorry, diverged a little bit. But yeah, TW. I mean, this stock also comes on my screen a lot. Trade web market in the financials specialty. Friday it had a reversal, but that's after a really strong update. So that it gives out about half of its gain. So that's normal action. But the breakout volume is super high, which is good to see. And there's also lots of volume support here, so that's also good to see. So this stock, is, I think, the base is a little bit short in time frame. So hopefully, IBD already draw the cup, but usually, 6, 7, right now it's 6 weeks. So 7 week, 8 week, it'll be slightly longer and then break out, and maybe it'll take off. So it has a nice run before, so it can run if this stock breaks out. So let's see. Apollo. Yeah, Apollo is also another stock that always come up on my screen. It just kind of slowly breaking out, which is interesting. The last run was right here. This is a 50 billion cap company. So yeah, 50-day slope, 10-day slope. So it's trying to mix it move still, but look at the selling volume. It all dry up here. So that's interesting, right? So that's interesting. So this have a high chance of running because there's no selling volume. So yeah, let's see. Polo, Progressive. This is a big insurance company. Yeah, insurance are doing really well. Interesting. Again, defensive sector, if yields coming down, a lot of defense, really defensive sector are doing well, right? Health, utility, all that stuff. So, yeah, so it come out of this pattern. It did roll back down on Friday, Thursday. It's tight, but volume is going down. That's good. It's on the uptrend trajectory like that. All right. So Celsius, on the discretionary side, it's one of the few stocks that are still trying to move right now. It has gone under a big base pattern. So it did come out on this upper channel line. It's looking very good. It's finding support at 10-day, and that's the slow. So it's still, probably because the base, it's weak before, right? It wasn't even on my radar for a long time until like this week. Tuesday, that's where, this strong breakout, everyone was talking about it from the upper channel line. But because, here's the thing about stocks, I find it's always very funny. And there's lots of eyes on this on Tuesday when it broke out from this upper channel line. And, and now it's kind of like digesting, and it's very volatile. You can see the trading range is pretty high. Sometimes with too many eyes on something, it doesn't work, at least at that time, so beware of that. I did get into it, but I haven't had any position since. But it's just like first buy and see how it goes. But there's a high chance it will fail just because there's too many eyes on it. But the numbers are significant. It just, I don't know why it never make a move last November, December, but it did finally move. But maybe it'll take a little bit more time, before it actually come out. So, but let's see. I'm hopeful for it will move because it's been a long base now. It's over 2 months now. Miniso, I mean, a lot of the Chinese stock this week rebound. And the ones that have good numbers, fundamentals are a lot of discretionary. Miniso is one of them. So they have really strong numbers. So this is a pretty deep base. IBD hasn't even counted yet because it hasn't come far enough to form a base yet. But this is a pretty. I mean, we're talking about 30 to 18, right? That's at least a 40% drop. So yeah, and I like this stock because it has lots. It can move when it moves, right? So this is based, to me, it comes, pretty much back down to previous buy point level, which is usually, and so this is something to always remember, that when you have a leader, they will break out, they will form a base, they will break out, and then they'll form a base, right? That's what happens, right? It goes up, form a base, goes up, form a base, and right. So this is the next base, and then it'll go up again. It just that's what it does. But you know, over the long period, it'll keep doing this, and then you have a very significant run after a couple or 2 or 3 or 4 or more years. The question is, you know, are you gonna catch some of this, right? Because this is a big move right here, and then this one is a good move too. Like you can see the green bar is right here, meaning 20% profit. It probably doubled that. It was like probably like 50% move. So yeah, so you know, anyhow, it started to move this week, but you know you can see it kind of quickly dissipate right after the move right here. So probably the safer line would be like the 50-day breakout here. That's probably the more safer. Or you know if you want to wait longer, that would be like this line right here, $28 around. But yeah, this is the you know. But so far it's trading tight. It made that big move. It came back. So then we need to see the next day. Is it gonna follow through and move again? So that's Miniso. PDD I really like a lot because they are now in the US market with Temu. A lot of people buying Temu stuff, my wife included. So we go down here, see how tight this is trading. This is amazing. This is probably the best stock chart ever, like in this, you know, in this last 2 months, because like it went up so much, and then what does it do? It goes sideways. This is amazing. Like, you know, for people who are, I can't remember Jim Ropel still holding this. He always talk about this stock, but I don't know how many position he has. So yeah, this is a very good stock. Like this is amazing. Yeah, keep your eye on this. Yeah, this is looking like, you know, look at this selling right here. There's no one wants to sell. I mean, the buying is also low, but the buying was higher here. The buying was higher here. So there's lots of buying, but right now it's just kind of not much selling, which is a good sign. Like I said, digesting 150. So around there. If it breaks out, huge potential. Because this base is long enough now, you know. It's like 6 weeks already. So it's getting long in the tooth. It's ready for a move soon. Then, yeah, so we still have USFD, wholesale food also came out. Toyota. I mean, I gotta look at Toyota because this is probably one of my favorite retail stock. Because it did run last year. You know, not a super strong run, but it's good enough of a run. And right now, it built this cup. And really, this doesn't look like a handle no more. It looks more like another base. But, you know, this is the breakout point. So, you know, just in case, you know, if anyone followed this, or I don't know if everyone followed it. So there's still an upper channel line here. So it's not really a clean breakout yet. But it's looking good. It's starting to form this right side, right? And you know, Friday's you know, volume came in and boom, it goes. But like it's still early. But what's happening in the EV market, right? You probably heard about Mobileye. Like it got hammered. Like this is so bad. Like I think they forecast 50% down on revenue. I don't even know the reason. That's how bad the guidance was. 50% down on revenue. I'm surprised the stock only dropped how many? 30% or something? I thought if you drop 50% in revenue, you would think it dropped 50%, right? But it did. 24% that day. Okay. So yeah, so what is the story happening, right? And I keep hearing this. I haven't heard it recently, but who knows? Maybe it's still true. That people are more keen towards buying hybrid cars, which Toyota makes really good hybrid cars. And whereas, you know, a lot of the EV guys, I think what was the other one? Rivian, right? They also forecast really big drop on their sales as well going forward. So again, same thing. I'm surprised it didn't drop as much as it should, which is a good sign for the stock, because you know if you have the worst news and it only dropped this much, maybe that's it. So yeah, I don't know what's going to happen to EV market, but it looks like all these guys are downgrading on their future guidance, not by little, like a lot. So that scares me on the EV market side. And Mobileye provide software, right? I think they do AI too, right? I'm pretty sure. Autonomous driving, yeah. So why are they selling so little? Again, I don't know the whole story behind it. Maybe it's just one. I know they sell to many vendors too, right? Not just a few. So, but yeah, I like Toyota because it has proven that it can sell its hybrid really well, and the fundamental stories there right now is building a base. Like I like this story, and I think hybrid will continue. Like two of my recent friends recently bought hybrids, right? Um, so plug-in hybrid they call it. So it's pretty much like an EV, right? Except it's not fully EV. Yeah, so yeah, I mean a lot of the same name. K-Russ just reported. So this is a sushi chain, and I knew about this stock for a while now. Like it hasn't done anything. You can see here for a long time. Um, but can it run? Can it be the story? Like there's lots of promise on the fundamental side. Like I think the story is like they're really trying to grow their chains. 54 restaurants right now. See, 290 in the future. That's how much they want to grow. So, but like I said, it hasn't gone anywhere for 2 years now. So, but it make a huge move after reporting earnings. Really good numbers, I believe, in guidance. So, um, yeah, but it's definitely going to be volatile. It's a really tiny cap, right? Not liquid. So, but I would pay attention to this because I just feel like there's not many chain stores that doing well. That being said, let's go to AMF. So Abercrombie and Fitch in the retail stock. Look at this chart. It's just unbelievable. I saw
Wow.
I saw it and then I have to
Wow.
buy it back, right? Like I bought it back. Maybe this is the top. Like I could be wrong. That's okay. But I gotta buy it back. It just doesn't want to go down. Um, it's just unbelievable. Abercrombie and Fitch. I mean, this chart is just no denial. Like look at this rebound right here. On Friday, I mean, there is some volume selling. Again, I could be wrong. This could be a fake out and it will break the low. But I set my stop loss pretty tight. So if it fell, it fell. We'll see. But it's definitely extended from the 200-day. 50-day, I mean, it is the widest since the beginning, but it's not like super wide for growth stock, right? Like it's not like 30, 40, 50% or something. So, um, so yeah, I mean, we'll see. I just like the chart. Like this chart just looks so good. It did. You can see I did break the channel, upper channel. That's why I sold. Um, but but the fact that this week it was able to bounce back surprised me a lot. So hopefully it's not a fake out. Let's see. EDU. I mean, this name's on my list for a long time now. EDU. Like this is the education from Chinese provider. Like again, this is one of those just doesn't give up. It just bounced back again, right? So Lee Auto. So Lee Auto, it didn't do this well. It didn't close strong. It tried to came out a week ago and then it kind of fall back in. So we'll see. Um, They already broke the 200-day one, so if it breaks it again, it's probably over. But let's see. Because EV in China is just growing so fast, so I don't know. Um, let's see what else. Okay, there's not much left. So yeah, like I said, um, a lot of the travel stocks are falling apart, but this one seems to be holding. Intercontinental, not international, UK based hotels. It's holding so strong. I'm actually surprised considering, like I said, the whole travel sector is getting hit hard. So if I go to like say, uh, like cruise for example, I mean cruise, yeah, it fall hard. It did bounce back. We'll see if this will be a short-term thing. and then let's say Expedia, right? Yeah, so this one is going down. So they're all on the downtrend now. So yeah, ISG is the only one that's still standing. So that's retail. Oh, we gotta look at MMYT. Let's see, because it broke out from this. Yeah, it broke out from this long-term trend. Now it's kind of pulling back a little bit. Yeah, it's okay. It's you know, if it's not a good sign. I don't like to see after a tight, especially a tight 3 week, and then it fell below it. So this is probably not a good sign. Let me look at the monthly chart. So yeah, we talk about this. It broke out from here, right? This long pattern, and you know, I mean, on the monthly chart it doesn't look so bad, but okay, go back to the weekly. Yeah, we'll see. Yeah, we'll see. You know, so this is the last support level right here. So if it fell below that, then I don't know. Yeah. All right. Okay, so I think we're done with retail. Let's take that out. We'll just go. There's not much names left. You see, it's dwindled down to so little now. So LPG is still running on the. I mean, this transport good stuff is just interesting. I think the Red Sea stuff really helped these guys continue their move. Yeah. So look at this. Look at the selling right here. Look at that. That's unbelievable, right? No one wants to sell this stuff. It's crazy. I sold some right here. I still own a lot. So good thing I didn't sell a lot. I sold like 20% or something. So, and then I add back more here because it bounced back. And yeah, look at it, just bounced off the 50-day. Like, this is impressive. Now it is starting to be a little bit extended from the 200-day, but the 50-day has caught up. So sometimes stock can be about anywhere 100 200% extended from the 200-day. So let's say this is 30, so we're not even at 60, so we're not even at 100%. So yeah, so when the climax happen, you know, let's say go up like crazy, it could go up 100 to 200% above the 200-day. But yeah, this stock is just unbelievable. So I'm just happy that I'm still holding this. Okay, SMCI. So SMCI, a lot of people are starting to talk about this. It's been, you know, gyrating like sideways. Right now, the only good thing is above the 10-day, the 10-week moving average, the red line, but it's not moving out. It's not moving out. So here's the 10-day, 50-day. It's not moving much, right? Like this was the previous resistance on the middle ground. Here's the super high. So it's just not moving. And I mean, the market is weak right now. So the relative strength come back up a little bit because it bounced back Thursday, Friday. So that is good itself. The last 2 days of action is good because it didn't close red, right? And not only that, it bounced from this moving average right here. So that shows it has support right here. So that could be, you know, if you do get in, this could be a stop, really tight stop. And if it does move and breaks out, then you're in the clear. So there you go. But yeah, it's getting closer and closer. Like, this is a long base. I mean, this is a strong run, so don't forget that, right? That's like 120 to 360. That's 200%. So yeah, it's gonna take time to digest, and it's starting to look good now. It's starting to look good because it found support here. It's a higher low, right? It's a higher high right here. So the uptrend has started. It's just need a little bit more time. So SMCI is still on this list here. And media, we talk about Meta. Those are also hitting new high on the relative strength. Some of the industrial starting to come out. So GBX, this one reported this week. It did fall back a little bit in the middle range, but it did try to come out. This stock did the same thing last time. It didn't move too far though last time, so I would be cautious about that. TT, Train Technologies. I mean, this stock has already moved. Okay, it has this big pullback. I don't know what happened there, and then now it's starting to move. It found support right here on Friday on this week, so that's a good sign. Right here, found support. So that also doing okay. WOB, HWM. Let's see. Well, this one also is trading really tight. Yeah, also found support right here. So volume on Friday was really high on the bounce, so that's really good. HWM. Okay, that's the next one. So yeah, we'll see if more, industrial, like this week industrial sell off most of them. So but this one is also one that again found support, bounce, strong volume, right? So this is also looking good. And that's the thing, when in the pullback market, that's what we're waiting for. We're waiting for the next group of leaders to take over, and usually the ones that are showing strong relative strength, usually those are the ones that will lead the next round, and because they coming out earlier, and these are the stocks that are coming out earlier. GPK is another paper products one. Sterling has fallen quite a bit. I think I screwed this one up because yeah, let's just look at it. This is a good learning lesson. I mean, it's not like super bad or anything. Like you can see that this week is really bad. Yeah, I mean, I was gonna set a stop loss at 80, but I forgot, so it didn't actually trigger. So I'm still holding it, but I've given back a lot of gains, as you can see. But yeah, this is why either you sell into strength or you have some stop loss that are near that high, right, to protect your gains. So, but this is I really like this stock, so that's okay. You know, but yeah, it's coming back. That's unfortunate. So we'll see. It might find support at 50-day. If not, probably then I'll sell. It's kind of too late for me to sell now because I missed my stop loss point. But yeah, so 50 days right here, and we'll see. The earnings, I mean, it's pretty stable, so we'll see. We'll see when are they reporting. On March 4th. So it's still a long time. So hopefully this is just a temporary thing. Like the volume is starting to go down, so that's another good sign. But anyhow, this was the only one that I missed selling out of other stocks. Yeah. Rock also came out this week. Like, let's look at Rock because I think this name came on my radar a few times in the past. So here's the move here. So look, this is pretty good. Like, I mean, it fell back on Friday, but it was trying to come out. So I don't like that. But the overall is pretty healthy. Like the volume on the downside is low, and then this is a rebound right there. And yeah, like I said, Friday. I mean, it's not bad if but the price is not good though. So I don't know. We'll see if it works or not. PHG. Oh yeah, PHG. This stock does pretty well. Overall in the last 2 years. I mean, look at this run right here, right? When the market was so weak, and then look at it. It built a base, and look at it now. It's coming out again. So yeah, I would pay attention to this one. Diversified operations. This is almost like bigger cap. Yeah, I mean it has a really bad few years there, a couple of years, but now it's completely the reversal. So yeah, it was out of my radar for a while. Like it was here, and then now it's coming back under my radar again. So yeah, I would pay attention to this. Reporting on January 29. Okay, just a few tech stocks left to look at. SAP, it's okay. It's like still on a downtrend. there's some signs that it has bottomed because it found 50-day support right here, but it's only 1 day, right? So it's hard to tell. But that 1 day, okay, I guess the volume is really low, so that's not a good sign. So anyhow, it's something to watch because, SAP, I mean, it is kind of similar to all the software enterprise stocks. A lot of them are getting hit hard. But yeah, I don't know. There's not much to say. They are getting hit. So yeah, so these are some of the ones that are actually hitting new lows. Like there's lots hitting new lows. This is just few. Yep. So they have hit 50-day EV double verify. Okay, so it's not at 50-day yet, but you see all these tech stocks are just like who knows how far they'll fall, right? Like that's the thing. Oh, let's look at this one. Let's look at the coin. I don't know. There's supposed to be some news coming out on Friday whether the SEC will approve Bitcoin ETF, but I haven't heard anything. Yeah, this has fallen back. It's still finding support at 10-day. Like that's insane. Look at that, how tight. Every time it comes to 10 that it just won't give up, right? That's amazing, man. Yeah. So I already sold my shares, but we'll see. I think the SEC approval. Like I don't know if it's gonna be a sell on the news count event. Like let's say they approve it and then the Bitcoin still go down. It'll be interesting to see, right? Yeah. So
Yeah.
last
I
week.
think there was something.
Go ahead.
It was not approval thing, but there was something positive news about those ETFs.
Oh, okay.
Yeah, the ECT.
Yeah, this guy is still running. Unbelievable, right?
Yeah.
This guy is still running. Like this is strong slope and supporting at 10-day moving average. This is a very strong slope. Yeah, I would pay attention to this. I don't have a share on this, unfortunately. I missed this one, but it's still a
Look at the wall.
yeah. This is like one this like I said, these stocks, when they move fast. Look at this, right? So but when it goes down fast too. So right now it's on the uptrend. Who knows, right? So but it's really good because this week the tech stocks are getting hit, but I mean this was hit on Wednesday, but it recovered, right? So that just shows how strong this stock can be, you know. I mean, CyberR is another, like there's so many stock got hit, right? All the tech, like most of them I already like removed temporarily from my list now. So this one, I mean, it's okay finding support at 21, but yeah. Like if you look at, let's see, CrowdStrike, because this is one of the best group I think this last year. I mean, this is not bad. Like finding support at 21, like I'm surprised. And volume, I mean, other than Tuesday and Wednesday, the volume, those are the two hardest days, I think. Thursday, Friday is, most of them are not down that much more, but if they do, then it's not a good sign. This one's a computer financial stock. So yeah, it's trading really tight. This is this is a long base too. So if so this is normal. It breaks out, comes back to the pivot, but yeah, and trading tight. This is actually pretty good. Look at the selling. Not much, right? Look at the buying. That's a lot of buying. So I like this stuff. Yeah, looks good. Like this is a turnaround story, right? Look at this. So yeah,